Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick. Got a lot of news today. We're going to try to get to as much of it as we can. Running the show from Joel's home PC, so if you have any technical glitches, let us know. We'll try to get it worked out, but that's the setup for the day. Joel, tell us what's happening this morning in the SP.
We got a rally going up 5 3/4 points at 27.72. Made a low at 27.57 1/4. Your pre-market high stands at 27.76.25. We need to get up and clear that 27.80 1/4 level. That was yesterday's high. Looking at the crude oil market, crude is trading up 20 cents here. Talk of an OPEC deal coming as early as Friday. That's giving a little bit of support to the crude oil futures. Gold in the red by $2.80 at 12.76 even. Silver in the red as well by 23 cents at 16.30. Well, there's a lot of news overnight here, Dennis. Where would you like to start?
Hopefully the audio is okay here. We're getting a couple complaints that the audio is a bit choppy, but we're trying from a different computer, so let us know if you hear us okay. Let's just start here right with the overall market. Look at the S&Ps. We have a little bit of a rally going. It came back in. The buy the dippers come in to rescue the market here once again yesterday. We got hit hard. We were at one point down 30 handles on the fear of a trade war. Well, there was no trade war imminent because by the end of the day, we're only down 10 handles, and we have pretty much now got all those losses back here just 24 hours later.
Yeah, 79.75 was your close on Monday. You made a high. The pre-market high was at 27.80. So you still got the resistance of above and the high of the move. That's way up at 27.96 here. All right, well, Dennis, it finally happened. GE is out of the Dow Jones Industrials. Did you have a chance to play it, or were you looking?
I did, and I covered way too soon. So I saw the headline break, and I went to hit it, and the crappy thing as a prop firm, you got to have a locate on everything you hit. I always have locates on GE, but I used them up during the day. So I went to hit it right away, hit the bid when I saw the headline to hit it to go short, and it says you need locates. And I go to my locate manager, and I'm quickly trying to type it in, but I waste like 5 seconds getting the locates. I get it, I hit it, and then I finally get it at 12.90, I think. I could have hit 12.93 originally, though. So I hit about a nickel down, and then it starts to chop around between 80 and 90 for a good 15 minutes, and I'm like, I'll just cover it here for a small gain. I think I made a nickel. And it's obviously continued a little bit further down since then, but not as, bad as you might think it is. Like when I saw the headline, I was like, whoa, this could fall 50 cents tomorrow. Maybe it's not gonna. I think it'll fall 50 cents probably within the next couple of days because it goes down 20 or 30 cents, it seems like, every day without news. This is not good news. I think you will have some indexers and you will have some institutions saying this is the last straw, let's sell it. But we got to respect the support that we hit back in March and April. And that's 12.73, 12.79, 12.82, all kinds of lows right in this area where we're trading at right now. We have breached a pre-market, so that's not the good news. But as long as we hold above the low at 12.73, call it 12.70 for rounding purposes, there could be some people trying to, pick a bottom here. But I don't think so. I think GE eventually takes that out and is, I'll still say I think it's I heard Jeremy Newsom say it on a show yesterday, and I've said it before here too. I think GE is eventually single digits.
Yeah, 1252. That is your pre-market low. 1250. A couple other brackets. So they're protecting it. I mean, at least at this level, the former lows of the move here in GE were right where you're talking about at that 1279 area. You had a few prints at 1273. So, if you want to, for a good day for GE here, trading down 19 cents. I mean, an incredible day would be for it to close over 13. An okay day would be over it to close over 1275 here. But where JC Perret sent out a piece about talking about the Dow versus the S&P 500, but JC's not available. But we're going to bring a new guest on today. His name is Tom Burney, and he's a technical analyst at All Star Charts, and he's going to join us at 8:35, and we'll see if he is on the same side of that GE S&P debate as us, or if he's.
So the article, and I just glimpsed it just quickly. I didn't have a chance to read the whole thing here this morning, but JC's just arguing that the Dow is still a pretty good index here overall, and sometimes and he actually prefers it to the S&P. So be interesting arguments there. I think the simplicity of it is what he was really arguing in his point here, going through those 30 charts, and the big guns. It's usually the biggest stock in each sector. Maybe a little easier to manage because there's only 30 stocks in it. We've always not liked it because it's price weighted. So what that means is that the higher price stocks have a higher weighting than the lower price stocks, which I think is just silly. Just because Goldman Sachs is trading at $229, does that mean it should be, trading way with a heavier weight than say at Disney, that's at 104, or the new WBA, that's at 66. That's why I don't like the index. But when the people do ask what the market does, and you say, oh, the market went up 12 points today, they're like, what are you talking about? The market was up 100 today. And that's because everybody does still refer to the Dow when you say, what did the market do today? At least people outside the industry.
Yeah, I do. So, so forever, if there's a winner, there's a loser. And the loser here is GE, but the winner is Walgreens, Dennis.
It is.
And winner.
I would have loved to put that pair trade on right on the news. Short GE, long WBA. I did a little bit, but there was just nothing to grab in WBA. I ended up being able to pick up 100 shares of 65. I was trying to buy everything I could when I saw that headline, but there was nothing out there. And the algos are all over it too. So the algos get the initial couple of shares there that are probably at 64.70, 64.80, and I'm like trying to lift offers too when I saw the headline go by because I knew this would pop at 3-4%. But I got lucky. I got 100 shares, and I sold it already at 67. And obviously, just buying it for a day trade off the news. But 65 to 67, not bad. But only 100 shares isn't nothing to scream about. Would have been nice to get some more stock. I tried, like I said, to buy a lot of stock on WBA when I saw the headline, but couldn't pick it up because there was just nothing out there. Anyway, stock now trading up 3.3%. Trading heavily now after hours in the pre-market, kind of finding its home in the 66 handle.
Yeah, and you did have a quick spike up here to 67.50, and you popped your head over 67 a few times here in the last few brackets. So 67.50, that's going to be your major resistance point. I'm trying to find something on the dailies here, and we came down hard off, off 68. So I don't see a lot in the 67 handle. You had a couple bad days back in April, but keep a nice round number like 67. I mean, how much is this, affect the indexers, or obviously getting rid of, GE and bringing them in. But the daily chart on this, Dennis, I mean, you think this thing, going to give it a chance to kickstart it long term? I mean, it's just not a good looking chart at all.
CBS is starting to get kick-started here. I had a nice pop yesterday on some news. I was up $3 ahead of this. And WBA obviously playing catch-up here today on the inclusion in the index. That 68 level, though, just looks like the big, wall of China, the Great Wall of China up there. So that's, when I'm looking at that, back in March, we topped out at $68 on the Kisser. Early April, $68 on the Kisser. Mid-April, we got up to $68.15. Late April, we got up to $67.88. I mean, there's just so many levels up there at 68. that's where I got to think the thing stalls out at least the first time. So if
Yeah.
it gets up there, first time up there, I know it only got to 67.5 last night. If they really get excited here off the open, decide they've got to own it, I think I might try it short at 68.
Okay. Yeah. Let's see if it can get there. All right. So news on some other stocks here.
Fox.
Starbucks. Or you want to go Fox?
Well, no, I want to go to Fox. Let's
Okay.
go Fox,
You should
Spencer.
go Fox.
Details here.
Your move, Comcast, Disney has raised their bid up from the original $28 a share bid announced in December to $38 a share announced this morning. Disney there, your move, Comcast.
Spencer's audio is a little choppy for me, even right there too. So I don't know, Spencer, if you can try to mic or just kind of like wiggle your jack there, because it's your audio that's actually not coming through quite clear. It's chopping a bit, but we kind of got what you're talking about. And Fox, as a beneficiary here, once again, I mean, it seems like every other day the stock pops $2 because they're going to raise the bid. I mean, they're in a bidding war for it. So I guess if you're Fox, you're just happy and you keep hoping the bidding war continues here. Maybe eventually they're going to pay $50 or something altogether, because stock's at 46.60 here right now, up another 2.5. Fox benefiting from all this love from Comcast or Disney.
And what's the takeout price?
It's 38, but that's not for everything. That's
Right,
they're still keeping some stuff. So it's $38 in cash on the stuff that they want, but Fox is still going to have some stuff left over there too. So it's not like they're buying the whole company. So that's why it's trading above that price.
That sounds like a complicated arb there, Dennis.
Oh, it is. Oh yeah, it is definitely complicated. But there's nothing finalized here yet either. So there's people speculating here and there, but I don't think your risk arbs are fully in this thing yet.
Yeah. Okay. I mean, it's because it's hard to gauge the risk. They are hitting Disney on this news. I mean, it's on again, off again. Disney did hit a low in the pre-market trading right at 104 even. Boy, I don't think you can really get on the Disney train until this whole thing is just ferrets out and you know exactly what's going on, because every time they raise their bid, they hit it and then it rallied back. You think it's going to pull? What was the day that everything opened lower and just rallied? That was like a week ago or so.
Isn't that every day?
Okay.
It was yesterday. I think it was the day before. It's just every day. BTFD forever, Joel. Don't you follow?
Oh, I'm sorry. All right. Well, we'll see if we can do that. House of Mouse, though, trading in the red. Had a couple good days. If you get up, I don't know if you're going to see that 109 handle again, though. Pair of highs at 109.42 and 109.49. Man, this has been 100 to 110 trading range. You've taken a little heat under 100. But boy, 110's been the top of the range here in the House of Mouse. Now can we talk Starbucks, Dennis?
Sure, let's do it.
All right, and you had a little exchange with Kramer yesterday, where I guess you both are kind of right on this one. Tell us about your little.
So I just tweeted Jim Cramer. Great point he was making on fast money. He was just saying, that this is ridiculous. That Starbucks is not down more on this. So give us the details on the Starbucks guidance here, Spencer, and then I'll tell you what Cramer was saying, what I was saying as well.
All right. I hope my audio is clear. If not, then someone else will have to be able to give this guidance. They say Q3 comps will be up 1%, and they're going to provide more on their investor presentation today. That was yesterday. 1% comps for Q3, and the estimate was 2.9%.
Yeah, you're still chopping up audio. So comps down. They're closing 150 stores. They lowered guidance. And the stock initially got hit pretty hard, Joel, but then it was bouncing back. And at one point in time, it was only down 50 cents. And I'm like, seriously? And then I was saying it to myself, just sitting here. I'm like, seriously? We're going to try to rally Starbucks all the way back on this awful news, really? And Kramer's on CNBC just pounding the table and saying, look, this is ridiculous, that it should be down a lot more on this. But then you had Fast Money and Pete Najarian were talking it up and Tim Seymour were talking it up. And it was kind of just hanging out there last night in the 56 handle, or in the higher 56s. So I tweeted at Jim Cramer because I kind of agreed with him, and I just joked, the Fade Logic trade appears to still be working. It was more of a joke because I was totally on the same side as him. I don't know if he took it that I was on the same side, but he was saying this is how these things work. The analysts will come out here tomorrow and downgrade the thing, and it'll be back down. Holy cow, Jim Cramer all over it because we got 3 downgrades today from, I think it was BTIG, Telsey, and somebody else downgrading it today, and StarBucks is down. So Jim Cramer with a great call on my Twitter feed.
Yeah, it was. And boy, oh boy, they hit this thing. I just got a little anecdote. I mean, they're closing 150 stores, right? And that was the news. But they're opening them like crazy around my area. I'd say
certain ones are closing, certain ones, and the China expansion is still happening there. But you know what the kicker really for me here is? It's that the growth. You look at the growth here, and you look at, you think about accelerating growth. You think about it trading over a 20 multiple, and it's not accelerating growth here anymore. Their same store sales were predicted to only be, up 1%, I believe, against 2.2, and their guidance they lowered here again. So it looks to me like it's stalling. And regardless of what you think about StarBucks long term, I was just saying I thought it would get hit a lot harder on that news, and it wasn't. Now it is with the downgrades starting to help, so maybe the Fade Logic trade isn't going to work on this one. But on so many stocks this year, you see bad news, and you see stocks rally on bad news. That was my joke with the Fade Logic stuff.
All right, let's take a look at StarBucks here. You have a pre-market low of 54.50. Bounce it up. I tell you, on the 15-minute chart here, you're seeing some good resistance just above 55.50. We're trading at 55.35 currently. Let's take a look at the daily charts here. And just kind of, what is that, a little bit of an accordion chart here? Up and down, up and down.
I love it. I think you're the only person on the street that uses the accordion chart. I love it.
Okay.
That's when the chart is just literally all over the place.
All right.
Like an accordion.
All right. The major, super extra major support here. If you hold it
I think you're the only one that uses super extra major too. I like that as well.
Thank you. You're very
keep it simple. Keep it simple.
You're very complimentary today.
I am. I even gave Jim Cramer a compliment on his 3 downgrades.
All right. You got a whole pair of lows here at 53.65 and 53.75. This was back in early February. Another low at 53.56. So for you StarBucks, bears and bulls here, that's your major support, whether they cover short or initiate a long. If you do go into the rally mode here, the close from yesterday is way up at 57.43 here. And just looking up at CNBC here, Disney just went green. Are you guys listening to the show and then trading what we're saying again here? Because I do.
Buy the dip.
Yeah, buy the dip.
TFD works again, even on Disney. It works on everything.
Yeah, it is. GE
seems like it, anyways, except GE. Yeah. It never works on GE.
Yeah,
sorry, GE.
Yeah, the GE exception here. S&P futures will hold a steady at 27.72.50, up 6 1/4. Really keeping an eye on that pre-market high of 76 1/4. Not a lot of people talk about Winnebago earnings, but we are going to talk about Winnebago earnings here.
We got a retailer, and we need to have one up 10% on the day, right? At least, isn't that the way it works? So WGO, there wasn't a lot of choices after Lazy Boys quarter last night. So WGO it is today. Spencer, details, Winnebago.
Actually,
do you want me to read, or my audio is just too bad today? For some reason.
It's not. It's 80% there. I'll say.
80%.
It's got to be something with the jack. So just keep playing around with that phone jack. Eventually, it'll be good.
All right. Well, $1.02, 92-cent estimate. That was the EPS. Sales 562 versus 538 million.
So, Joel, I've been in a lucky hot spell here. Right now, it's like I've got the Midas touch, and this is the way trading goes. Sometimes you're hot, sometimes you're not. Right now, I'm in a hot streak. I actually got stuck with Winnebago at the close, and I was like, oh, I don't want to take it through earnings. I was trying to sell it last night. I'm like, I can't get out. There was literally no bids. I was going to hit $1 down. So I decided I'll just hold it through the earnings. It's up 11%. So I hold it long through the earnings, and I just get a bonus 11% here. That is not good trading. That is just BS luck on my part. And, when you're hot, you get some luck. And when you're not, you don't get luck. And, right now, I've been on a little hot streak here. My trading's been going very well. I've been making some good calls. Everybody knows that in the chat. Sometimes you're lucky, sometimes you're not. Right now, I'm lucky.
Don't tell me where you sold it, but do you still have it?
No, I sold it here. I sold it 44.60, I think.
Oh,
so I didn't quite get it all here.
No,
it's at 44.85. It's probably going up 20% today. So, but anyways, I was like, boom, bonus 11%. I didn't want to be in the stock, and that's it. Sometimes I'm trading so many things. And sometimes, you miss something, or I'm trying to get out before the close because I knew, I like to play my pre-earnings run-ups, and I play the different things. Sometimes I just get distracted. I've got like 30, 40 positions on. I'm like, I didn't sell my Winnebago, and I wanted to get out of it before the stock, goes into earnings. So last night I'll be like, okay, well, maybe it'll get bid up, and it did get bid up for a little bit, but I didn't get out, and then it's like there's no bids. So I'm not going to sell something $1 down after hours and just take I'll hold it through the earnings report because I'm just giving up alpha there. So I'll do, and then also at the point where some of these retailers have really been hot too. So I wasn't completely scared to hold it through. If I was going to lose 4 or 5 points, I would lost 4 or 5 points. But turns out I can't make 4 points.
All right, that's a nice one. I'll just alert our traders/investors that you have a pre-market high of 45.70. We are trading 44.90 right now. We haven't been up in this quadrant in quite some time. Just be aware, my number is 45.40 on the upside. That was your March 20th high. I can illustrate it here a little bit better with the daily chart, but 45.40. That's a big level to keep an eye on.
Then Oracle reported last night, which we haven't talked about yet. It did get the nice pop on earnings, and then they turned around, and then guidance came out, and guidance wasn't good, and they've slammed this thing down here now. Spencer, just give us the numbers, give us the guidance quick. We'll work with your audio.
All right. Maybe it's better now. I try to rearrange some stuff. Q4 EPS 99 cents versus 94 cents. Sales 11.3 billion versus 11.19 billion. Guidance. EPS guidance 67 to 69 cents versus a 72-cent estimate.
So if you didn't catch all that, basically it's guidance lower. And, we know from our algorithms that we talk about on the show and jokingly that guidance is the most important thing. When you see lowered guidance, usually the stocks will go down. They did. They lowered guidance. It wasn't on the initial call. It's why the stock went up initially. But when the guidance came out after, they slammed it down. And now we're trading down at $1.72. I still own Oracle in my investment portfolio, so it's not all good news here for me today. But I try not to look at it. I think my average cost based on Oracle is something like $12. So I'm going to stick with it here at 44. Although, it's one that I've been in for a lot of years, and it's starting to look a little bit like. I know we had Jim Cramer, I think, saying, Salesforce.com. Somebody was saying last name, maybe it was Guy Adami, even on CNBC, just how Salesforce.com appears to be, eating a little bit of Oracle's lunch. I mean, if you look at that Salesforce chart, that does appear to be true. I don't know. I don't know Oracle. I'm in it, but I haven't decided if I'm going to be in this thing forever.
Yeah, I mean, this is one tech stock. You talk about your Intels, you talk about, all the different. Rallies and Apples and
hasn't had a good year.
Yeah, this has not had a good year, and that's concerning because if you go into a down market, then this one could be on the worst end of things a little bit here. But 44, we're just going to stick with that level. 44.07, that is your pre-market low. Looking at the daily charts here, this happened again last quarter. And, we'll just have to see if it holds 44. You got down there, it would last report here. You came down to that area. Actually, you didn't come down quite to 44. Where'd you come to? You came to 44.60 here. So this is not good. This is not good at all for Intel.
It takes out 44. Oracle takes out 44. And that's an issue. I agree, Joel. You look back even in 2017, you had a couple of those 43.60. So 43.5 to 44, that's where it has to hold. If it doesn't, Sync could be back under 40 again. That's not happening because Oracle's a big stock that trades slowly, but over the course of a few weeks, funny things can happen there. When stocks go out of favor, they go out of favor. So this absolutely is critical that it holds 44.
Here's a monthly chart for you. I mean, it did crawl back to make a new all-time high, over $50. But I mean, you could see that this when it broke out of 40, had a little pullback, but 44, we take that out, whole number like 40 on horizon. Obviously, it will take a while to do that. It's not going to go down all in one day. And House of Mouses continue to rally here. So buy the dip.
What is the news here? Is there news that broke? 107.5 now. There had to be something. They must have said something. It was down $1.50 when we just talked about that. Now it's up $1.50.
Because we were talking about it on the show.
BTFD.
Yeah, I mean, there's no other news. Maybe we should put that in the news wire that Disney rallies did. I don't know. It's a good company. They're trying to make the acquisition. It's going back and forth. Needs to clear 110 long term, but still been in a trading range.
I own it long term, and I'm sticking with that one.
Sticking, and it's gonna. Do you see Netflix today, man? Unbelievable. Do you see this thing? Did we get another?
This goes up forever. You can't stop it.
Netflix.
You can't stop it. Valuation be damned. It doesn't even matter. Valuation just doesn't matter on certain stocks. Netflix and Tesla is usually one of those two, but Netflix is just unreal. I kept saying the numbers are going to be good. Subscribers are going to go up. They only allow 2 users on an account now. So there's a lot of people that are signing up that were already addicted to it. It was smart. They allowed 5-6 users on an account. Everybody's ripping them off. Now they're all of a sudden, now we got you addicted to it. Now we're going to make you pay. So smart move. So next quarter, I think Netflix is going to blow it away. When does Netflix report?
Let me go to here by Benzinga Pro to go to Netflix and see when they have earnings. Let's see. Let's go to my calendar.
Spencer, you can do this in the background too.
Yeah, his audio is a little choppy. I got it here.
Well, he can find it though.
I got my Pro up, and June 19th. Actually, we don't. Oh, that was the last analyst rating. Let me go to earnings. July 16th.
I thought it was going to be a 10-second exercise, not a 2-minute exercise.
July 16th.
When is it?
July 16th.
All right, I'm calling it right now. Netflix blows the subscriber numbers out of the water because you're getting people like me who didn't have a Netflix account before that have to get a Netflix account now because I can't go in and piggyback off of one of my buddies' accounts because they did just drop it to 2. Is that everybody? Like everybody's same thing, right? Isn't it 2 now, Spencer? Can you verify that? I think there's only 2 logins allowed on an account now.
What if they actually beat on EPS too? I mean, I know we went into
all they care about subscriber numbers, and they're gonna be big. So I think there's people anticipating that too. I think Netflix will be $500, and I'm not long it. I'm not going long it because it does not meet any of my criterion for investing in a stock. But as a trade, so I might go long it as a trade, not as an investment. That's the difference. But I think Netflix, I know Jeremy Newsom was saying 400. It's going to have a significant pullback here, though. There is going to be some type of, things just don't go up 10 points every day and not have, some shakeouts. There's going to be some shakeouts, maybe even a retest of 400, and maybe that's where you pull the trigger, on a pullback. So I don't know if I'm coming here chasing it here today, but on any pullback, and I think everybody's thinking the same thing, on any pullback, they're buying it. I think the July subscriber numbers are going to be awesome, and I think eventually it could be $500.
I wish I would have looked at this before, but going back, the earnings report, this was from Q1 of 2012. It had revenues of $870 million, all right? And it has increased its revenues every single quarter.
What is its revenue now? So when was this? $870 million when?
This was for Q1 of 2012.
Okay, so here we are 6 years later. What's the revenue now?
$3.7 billion.
Yeah, so it's significant. I mean, the stock price has kept up, though. Still, from a valuation perspective, I don't understand how it can be worth more than Disney, but I do understand. It's just what's hot is hot, and that's just continues here. So eventually, at some point in time, valuation matters, but not right now. And I'll tell you, the subscriber numbers are going to be good, I believe, in July. And that could propel the stock maybe even up to 500 in July.
Look at this house of mouse here, Dennis. We just printed 108.50.
Can't stop from going up. Maybe they thought they were going to pay even more. So I don't know. I'm not following, I'm not following the headlines from the last 30 minutes because I've been on the radio show. But I will just say this is a nice pop back for Disney after we initially talked about it being down $1 because they're, up in their bed. I guess that's expected. Everybody knew they're going in a bidding war. Maybe it wasn't quite as much as they thought they might raise it to.
Yeah, but it's not.
In any regard here, this House of Mouse is catching a bid right now. Catching those shorts.
Let's see what happens here, though.
Squeeze them.
Yeah, you have a pair of highs. This was from last week, and that would be on Thursday and Friday. You have a pair of highs at just under the 109.50 area. We didn't quite get up there, and I didn't think we'd get up there by the end of the show. But just be aware of that double top at 109.42, 109.49. Dennis, we just passed the 8:30 mark here in the show, and that means imbalance time. What do you have for imbalances?
GE leading the way with 651,000 shares to sell. That will be in the millions by the time we open. But it's holding on. It's still holding that 1270 support.
Where are you buying it? Where's too much news? Too much news.
I'll sell it short. I'd sell it short if anything. As a trade. As an investment, I'd sell it short. As a trade, I'd sell it short if anything. Maybe you're going to have a relief pop in here. You got to have a stop if you're going to trade it. But this, it starts taking out that 1270. This thing, if it takes out 1270, it could be $12 in a day or two. Because there's going to be eventually some people. Maybe it's going to be one of those situations where, everybody thought it was going to come out of the Dow. So 1270 is a level in the sand that it absolutely holds. I'm not going to short it above 1270 because if it can hold that level, it could potentially bounce. But below 1270, Katie bar the door. Thing will go to 1250. Takes out 1250. It's going to 12. And sorry, Spencer.
1250 is your pre-market low in General Electric. I did see one analyst that came on CNBC and he was defending it. He said all the bad news is out. The Baker Hughes.
How many times have we heard that? All the bad news is out. That's all we ever hear in GE is all the bad news is out, and then more bad news comes out. They're slashing the dividend eventually. It's 3.76% dividend. They're probably going to kill it. Isn't it? Now you're going to say, well, that's all baked in. Maybe it is, but I think eventually this dividend yield is zero. They need to raise cash. They're selling off assets. I mean, they just got so many problems. It's, Jack Welch must just be like, he probably can't even turn on his TV watching this type of stuff. I mean, you think about when Jack Welch left, and sure, maybe, he left at the perfect time and the market was topping out and everything, but wow. Since he has left, this has just been an absolute disaster.
Okay. We've gone 32 minutes here, and we haven't talked about a pretty big company that reported. And before I mention that company, I will bring it up. And FedEx did report after the close here. EPS beat of pretty good, $5.91 versus $5.68. That was a nice beat. Revenues were a slight beat here, too. Dennis, talk about the price action here. I'm
going to limit my comments. I got a position on it, so okay. I just want to limit my comments. I don't want to be the person that influences and talks my book, so I'll just limit my comments. We'll let Joel do the commentary on FedEx.
Well, it's all over the place here. You did get a spike on there with your pre-market high, 261.75, and they must have given support guidance or something. I will tell you, buyers have stepped up in the lower 255 handle. Really, after the initial news came out, 255.29, and then you went to 255.28, hanging out here at 256.90. So that's where your support is. Let's go to the daily charts and take a look and see what we can see from the dailies in FedEx here. It's had a nice run. We'll see we're pulling back here. Let me try and find some support for you. Wow, there's not a lot in here, Dennis, because we had that nice run up, except for 254.98. That was your June 7th low. We got down there near in the pre-market. That absolutely has to hold. If not, you are looking at no real good support until 251.51. and that was your low on June 6th. So as we did mention, JC sent an article here talking about GE, or talking about the Dow versus the S&P. So what we're going to do is we're going to take a quick break, and we are going to bring on Mr. Tom Bruni from All Star Charts.
Yep, +1.
Hi, this is Tom Bruni. Sorry I can't answer the phone right now. Please leave a message and I'll get back to you as soon as possible. Thanks.
All right. Well, Mr. Bruni did not answer there, so we are just going to have to continue the show here. Maybe he will try us back, but no more Mr. Bruni here. That's sorry about that, folks. All right, Dennis, 837. Let's pick it up here with the S&P still trading up $7 here at 73.25.
I like when Joel mutes the show, but he doesn't mute any of us, only himself. So if we say something offside off the air, he's safe if he says something offside, but we're not. That was kind of funny. Anyways, get a little bit of a glimpse into the background of the pre-market show there. So jump over here back to. Well, we're not going to go to the earnings parade here. Well, actually, you know what? Let's do the earnings parade. We don't have any to report here. I don't want to do Lazy Boy because I don't feel like doing the Lazy Boy story.
You don't have to do the Lazy Boy.
Okay, well, give me the Lazy Boy earnings then, but I'm not telling the Lazy Boy story. It's too long.
Why? I mean, you can do the short, the short.
I can't. I did it last time, I think, the Lazy Boy story.
I did.
With my buddy getting rescued from the jaws of life with the Lazy Boy.
He's done.
So we're done.
Okay,
we're done.
I did give the Monroe trivia. I shared some other trivia yesterday. Do you know who the famous general from Monroe? You know who that was, correct? The famous general, one of the infamous general. They got it in the chat last.
Who?
Well, you probably don't know this because this is U.S. history. George Custer. General George Custer, who went down a little bighorn. And did you also know that 1988 Miss America was from Monroe, Michigan? Kaylani Ray Raffo.
That's stuff going on out there.
Yeah, she was on my swim team. But anyways.
Yeah, seriously?
Yes. I'm going to have to, next Lazy Boy earnings, I'm going to get her on the show.
There you go.
All right. EPS beat of 2 cents, 64 versus 66 cents. Came up a little light on the revenues. The street was expecting 427.4 million. They only had 420 million. So it looks like the revenue here is ruling the day for Lazy Boy. Initial pop up to 34.90. Then you came all the way down to 30.25. I don't know. I see a couple lows, at one low only at 30.15. So let's see if that can hold. If not, you're looking at your May 16th low of 29.65.
Jump over here to Micron, which is going to report here tonight. I am playing Micron from alongside ahead of the report. You know how I like to buy my stocks ahead and play the pre-earnings run. somewhat working here last couple of days. We've had a little bit of a rally here. We're rallying here again this morning, so I will get out of this before the earnings report. Not going to hold this one through the report and hope to get lucky like I did in the WGO. Although I do have it on my investment account, I will be holding that through. So I have it on for a trade and an investment. I will be holding the investment through. I will not be holding the trade through the earnings report. MU, thoughts as it goes into tonight's report?
It's just hanging out here at $60. I don't know we were talking about this with someone yesterday, looking at the support, and the major support was under 57, but only got to 57.11 yesterday. Looking at the daily charts in the $60 handle, if you're looking for a potential target, 60.57. That was your June 14th high. So nice little run yesterday. You can go into report. Dennis, you're playing it ahead of the report. We'll see what happens. See what happens in Micron, and that's after the close today, correct?
Yes, it is.
Okay.
Jump over to these Momo stocks. Some of them lost some steam yesterday. So let's just talk, we haven't talked to them yet. We seem to talk to them every show. The IQ, the HUYA. Let's go to HUYA because this was the leader here. And I got scared there yesterday morning for the simple reason that a lot of these stocks had the whipsaw rally right off the hop. And then they turned around and they started to drop. And the HUYA went from 51 to 44 in like 15 minutes. Yeah, somewhere like let's say a half an hour. It was a crazy move. So anyways, I think these stocks topped out yesterday. Some of them anyways. That HUYA, it's easy to say in hindsight there, but you kind of got a triple top just above the 50 area now. And boom, it's down to 42. So this bounce here this morning, which we are seeing a nice bounce because there's people that are coming in here and saying, it was the dip to buy. I don't know if it was the dip to buy. I think we've turned into, on this HUYA, I think there'll be some overhead resistance as you get 46, 47, 48. Now, it's hard to say short of 45 because the thing could go to 50 and you still didn't make a new high on the move, so you almost have to stick with it. I don't like giving them that much room, but I'm just saying I think the HUYA, this might be actually a rip to sell, not a dip to buy. So the dip to buy was yesterday. It is up $3 here this morning. There's a big pop here back, and these things are popping back, but I think we saw the highs of the move yesterday. So I'm actually a fader of this rally in HUYA, although I don't know if I got the guts to short it.
Yeah, I mean...
And on paper, I'm a fader of the rally.
Fader on paper. Okay. It hasn't had the volume die out yet. 15 million 3 days ago, then 9.5 million, and then 11 million. So, it doesn't look like the day traders have given up on it. So I'll wait. In order to short this thing, with the IQ, I got tanned a little bit, so I'm going to be a little bit more calculated if I do this again. You want it to get up, maybe make a double top, hang out in the same area, consolidate, and then let the volume dry up and then go down. But right now, it did have a $6 drop yesterday, but in the green today.
Well, I had an $8 drop yesterday.
Well, yeah. Well, if you
that's 20%. It moved down 20. These things are there's, like we've said, even on the way up, they have had some wicked pullbacks though. There's a 20% fall in a day on that thing. They've moved. They've been moving up 10, 15, 20%. Then move down 20%, easily. And if you're in this thing from even a month ago and you're bought at 20, it's up at 45, you're still pretty content right now. So I'm just saying that candle from yesterday is a bit of a warning signal for me.
Okay. All right.
I don't know what Spinner is saying. He's really good in the chat, what he's saying about these. But, IQ, same story. It did not fall nearly as much, a little more muted activity, but it fell significantly. We got up to $46, and then we went down to under 41. So significant fall. We are bounced back big time here up to 44, 35. I just think there's going to be some people, 44, 45, 46, might be willing to sell it here now. So I don't like the candle yesterday. BILI, another one of those, right with it. Same thing. It actually could not make a new high. It's put 1, 2, 3, last 3 days, all the highs are in the 21 handle, and it's peeled off and it closed near the lows. It's bouncing back here again this morning. I think these, it all depends on what the market does overall, but, and I could be wrong. I'm more of the boring stock trader, but I find I do okay sometimes trading this stuff too. And I just think this might have been, this might be the rip to sell here this morning too. Dropbox, DBX is trading up. It's kind of its own animal, but they do follow a little bit as well. I sold half of my Dropbox yesterday at 42.30, right before the fall. The reason I sold that was HUYA started to roll over. So you say, what does HUYA have to do with Dropbox? Fundamentally, absolutely nothing. But right now, all these things kind of are moving together. So HUYA started selling at $3-4. I was like, that's my cue to at least exit half of my Dropbox. Sold half, still have half, but I think it's up to 41, 42. I might actually sell the other half of Dropbox here too. So I'm almost, at a point where I'm all out of a lot of these little high flyers.
All right. I just got a message from Tom Bruni from All Star Charts, and he wants us to try again. So we are going to take a quick break now, and I'm going to do everything correctly here, and hopefully.
Let's just bring him on the fly.
You want to bring him in on the fly?
Yeah, because you're not muting us anyways.
I didn't know how to do it that time. Okay. Let me see if I can bring my Skype up here. Tom Bruni from All Star Charts here. We met Mr. Bruni when we were out at the FinTech Awards. We got to get his take on working with JC.
Hey, this is Tom Bruni.
Hey, Tom. It's Joel, Dennis, and Spencer from Benzinga's PreMarket Prep. You are live. How you doing?
I'm good, guys. Sorry about the technical difficulties. It's my first time doing any media, so I wouldn't expect it to go smoothly.
It's all on you, man. It's all on you. I could take a little bit. Tell us a little bit about your background, how you became, started working for JC and what you do for him.
Yeah, sure. So I'll keep a long story short. I interned for JC in college while he was running Eagle Bay Capital. So I learned his process there, learned a little bit about the hedge fund industry and technical analysis. Then I went off to Ernst & Young. I did internal audit consulting for about a year and a half. And then I decided, I couldn't scratch my itch for the markets. And so finally this December, I left Ernst & Young and rejoined JC to be a second analyst on the team.
Okay. And we read the article today by JC. Is that something that you worked on him with, or is that all JC's work?
Yeah, so he wrote that this morning. It's part of our education section on our site. But I followed the exact same process. And I guess I can explain why it's so important. So the Dow gets a lot of flack for only being 30 stocks. People say it's not really representative of the U.S. economy anymore. Therefore, it doesn't have a whole lot of value. But as you pointed out in the article, if you look at the correlation between the S&P 500 and the Dow, they move exactly the same. And one of the benefits of only having 30 stocks is you can go through that on a daily basis or even a weekly basis to really get a feel for what the different sectors within the market are doing. So, we go through that each week on a weekly and daily time frame. Weekly, we get a structural perspective of what's happening in the market. Over the long term, what the long-term trends are, and then daily we can see what the tactical, approach should be, whether or not we want to be timing our entries or exits a bit better for the long term, or if we're setting different price targets, based on that time frame. So, I think it's a very valuable part of our process. Like as of now, you can look through the Dow and see a lot of relative strength in American Express, Visa, Cisco, and you can see there that there's strength in the credit card processors, in tech, in retail with Nike, and then you can see a lot of the relative weakness that we're seeing in consumer staples, in Johnson & Johnson, Procter & Gamble, Coke. And then even large cap financials, JP Morgan and Goldman Sachs. So it really allows you to get a good feel for what the market's doing and what the individual sectors are are doing, and which are showing relative strength and which are showing relative weakness.
I think, and I somewhat agree with, I just read the piece that, JC wrote there, and I somewhat agree with this. It's just the fact that Dow is a little bit simpler, way of looking at the market. It's easier for you guys to look through 30 charts as opposed to 500. You're getting that overall picture anyways, the biggest stock from, basically, each sector in there. So just kind of the simpler way. Is that kind of what the argument is?
Yeah, exactly. We realize that a lot of people don't have the time to go through the entire S&P 500.
Right.
We're lucky enough to do that full time, so we have that luxury. I go through the S&P 500 once a week, but a lot of people don't have that time. So if you want to simplify it, you can get the exact same benefit with only 30 stocks, and it only takes about half an hour to do that.
I mean, if you take, go ahead, Dennis, go ahead.
I was going to say, what about the fact that it's price weighted? Do you guys, it doesn't really matter to you on that? Because I've always just not liked the index because it's price weighted, and Goldman Sachs means a lot more in the index than, say, Coca-Cola, because the price of Goldman Sachs is $280 and Coke is sitting down there with a price of $43. So that's why I've kind of never liked the index. Not so much that it's only 30 stocks, just the fact that it's price weighted and not, based more on market cap.
Yeah. So to address that, I mean, yes, it is price weighted, and some of the components, like you said, are not going to have that big of an impact. But we try to take a weight of the evidence approach. So if we go through and we see 20 of the 30 stocks are in uptrends and the other 5 are neutral and there are only a few sells, that gives us an idea of where the index is headed. It's going to be tough for that index to crash if only 5 or a handful of stocks are in downtrend. So we just try to take a weight of the evidence approach, and due to the correlation with the S&P 500, whether or not they move exactly the same percentage points is not what we're concerned with. It's just the concern that they move together over the long term. So price weighted versus cap weighted. Yes, it makes a difference, but really we're just looking for to weigh the evidence across all the stocks in the index.
Yeah, I mean, it kind of seems like it. The argument is because it's only 30 stocks, and it's easier to look at 30 stocks versus 500. I think where Dennis and I come from is that 30 stocks, which you can pull in and out with different prices, as opposed to 500 stocks. I mean, it's just, maybe it's a better, or easier tool to use in the short term, but in the long term, I mean, the S&P 500 is just a much broader representation of the economy, of all the, of everything. Whereas the Dow, hey, I can pull out a low price GE and put in a higher price, WBA. I would love, I don't know if anyone has the charts, but, going back, I mean, looking at Dow, 20, I mean, no, I didn't look at it, look 25,000 or whatever. I just don't think it's a fair representation of, of the overall market.
Yeah, well, to my point earlier, they move together, right? So really, like you said, it's a tool. So if we go through the entire Dow 30 components and we pick out Home Depot, Nike, and Microsoft showing relative strength, right? And then we can use that to say, all right, technology and consumer discretionary, and specifically retail, are showing relative strength. So then we can go into the S&P 500 and look into those sectors and see if we're seeing the same exact thing. And the majority of the time, you will see the same thing. Okay. So then we can dive deeper and see which individual stocks within the broader S&P 500 that we want to participate in. But just by looking at the Dow, you can get a feel for where that relative strength is, and then dive deeper if you want to do that.
Give us a couple stock. You guys are pounding through these charts over there at All Star Charts, and even if you're pounding through the 30 Dow charts, give us a couple that you like the best right now.
Yeah, so we'll stick with the Dow. Obviously, I mentioned Nike in the retail space. Same thing with Home Depot. They're both in the consumer discretionary space. If you look at that, it's hitting all-time highs relative to the consumer staples on both a cap-weighted and an equal-weighted basis. So we're seeing broad-based outperformance from the consumer discretionary sector. So contrary to popular belief, it's not just Amazon. There are a lot of stocks in that index that are outperforming. And then in healthcare, we got United Healthcare, looks great. And then Visa, obviously, hitting all-time highs just this week. So yeah, we like consumer discretionary. We like retail. We like some healthcare names, starting to see some rotation there with biotech hitting all-time highs last night, yesterday. And then, large cap financials continue to struggle with those 2007, 2008 highs in the XLF. But there are specific pockets within financials like Visa and American Express that continue to work. So those are the areas we like. And obviously tech, that's been everyone's focus. So Intel, Microsoft, and Cisco, and obviously Apple as well.
Anything you don't like? Anything that you're looking at from the short side?
So I guess on the short side, maybe stick with, some of the weaker sectors of the market, consumer staples and utilities. I know they've gotten a bit of a relief rally over the past couple of weeks, but, structurally they look pretty bad. They're below downward sloping 200-day moving averages, so they're in downtrend. So, those are the areas we want to be looking to sell strength and not necessarily buy weakness.
We've been on the line with Tom Bruni. He's an analyst with JC Perret at All Star Charts. Good information there, good arguments, and glad to have you on. We'll get you on again real soon. Thanks, Tom.
All right, guys. Thanks for having me.
Yeah.
Appreciate it.
Yep, great job. All right, S&P's back up near the highs of the pre-market session. We're trading up $8.50 here at 74.75, right near that pre-market high at 76.25. Dennis, what are you seeing here with about 4 minutes left in the show?
Somewhat more imbalance. A square 125,000 to buy. I believe it was Evercore. Went to a street high, raising their price target up. I thought I saw 73. Maybe Spencer can correct me if I'm wrong on that, but it just continues to run. I mean, the leaders continue to lead. The laggards continue to lag. It's been this story all year long, and it continues to be the story here. Square is just one that they just buy on pullbacks. I mean, Twitter pulled back a little bit yesterday too. It's right back up here this morning. 44.5, 43.5, the lows from the last couple of days. So obviously important that Twitter can hold the 43.5 level here, but still a hard uptrend there. And obviously Dorsey doing well with those two stocks. AT&T continues to hold as 32. We talked about it yesterday on the show. It bottomed right in that area, opened right at the low again, and caught a bit. So somebody is putting a hard bottom in on AT&T at 32. I will say, there's a chance, this thing could bottom here as long as it holds above 32. Below 32, I don't want any part of it, though. So, caution if it takes out 32, but above 32, it looks like somebody wants it.
Yeah, and Verizon, that had a nice day yesterday off the upgrade here. Really no heat off the open in this one. 47.67 low, 47.67 open, 52 low. So nice one in Verizon. Let's go. Let's just cover some stocks here in the YouTube chat. Sarepta. Holy mackerel, Dennis! Did you ever take this stock? We get up to 100. What did it get to yesterday? 176.50 was the high. Peeled back. Unbelievable move.
I mean, this was one of the worst sales I've ever had in my life. I bought this thing in my investment portfolio at 30, and I sold it, I think, at 35 or 36 because there was some headline or something I got scared on, and I was like, I don't know enough about this, and I'm out. And this was back in mid-2017. It traded between $28 and $40 for the better part of half a year. Since then, it has been straight up. I wish like hell I obviously still had this in my portfolio. I've been a 5-bagger. And I sold it for literally like a 15 or 20% gain, and that was just one of the worst sales I've ever had. And I regret every single day. And when it pops 60 points yesterday, I'm sitting there just banging my head against the wall because I had this stock. I had a good chunk of shares on it, and I just sold it way too soon.
And, it's the news on this was, the muscular dystrophy, drug. And they had already, had obviously been successful with another strain, the Duchenne muscular dystrophy. So, I mean, once again, looking back like, wow, maybe they could, expand and, and get into regular MD. And that's exactly what they did here. What a big run up. He went to 176.50. Had a low of 135.73. Shorts got blown out of the water here. I'll just keep an eye on 43.93. I mean, this thing could go anywhere today, but that was your close. I don't think you're going to see that high as 76.50. The low, I mean, if you get in below 135.73, then just be aware that you got a gap down to 107.49 here. So there's a lot of air. Keeping an eye on the closing price. For DC, thoughts on Cardinal Health, Dennis? We'll do that one, and then we'll let you go, and then I'll try and pick up some of these other stocks in both the chats. But
reversal day. So here you put in basically a double bottom last 2 days. We always like those formations. Joel and I look for those 52.64, 52.66. We bounced right off the prior day's low, and we caught a bid from that point all the way up to 54.10 to close. I don't know. Really here, obviously the trend is still not your friend. It's been ugly. There's a pile of resistance up from 55 to 56. It needs to take out 55, and then you can start, and especially 56, and then you can start thinking about attacking that gap. But until you get above 55 or 56, bears are still in control here. Above 56, and it starts to get interesting.
And this is just, I'm going to give you two levels ahead of that 55. Last 2 days high, 54.40 and 54.61. So it looks like your 55 sellers, they still may be there. And you got a double top, and then you got a triple top. So, man, if you could take out all those highs here and close above 55, I don't know what this got killed off. It was an earnings report, but the highest it's been since the disaster when it dropped from 65 to like 53. The high has been 55.93, and then you get into a big gap area, but it's trying. Let's see if it can clear a couple of those resistance levels. All right, Dennis, 901 here. I'm going to let you slide. I'm going to pick up just a couple one or two other stocks here in the chat, and then we'll wrap the show up for today. So, Dennis, we'll check in with you later on.
Have a good day, guys.
Okay. Let's see here. We have in the chat, Miami Option is asking about Netflix here. I mean, I don't know what to say. If you own it, just keep moving that stop up. Analysts have just been taking the price up higher with the price targets. You look at all those impressive earnings on the revenues. The only thing I can tell you is your pre-market high is just under 414. You may have a little seller there because you've had multiple highs here, right just under 414. So if you want to see continue this rally, continuing along with the S&Ps here, 414. If you really have to get out, use half and whole numbers, perhaps 414 and a half, 415. But just seems to be no stopping Netflix. And same with the IQ. I mean, that had a rough day yesterday, but that seems to be that one's the Netflix of China. So that's moving along with it. Let's see here. You're welcome, astronomy fan, on that. Let's see here. GBLS. I think, is that a lower price stock here? Let's see. I'm not seeing anything on that one. We have any other stocks in the chat here that we need to take a look at? No, we don't. Okay, we're going to wrap things up for today. Thank you guys for bearing with me through working through these technical difficulties. I promise I'll have things down better tomorrow. Have a great trading day. We'll be back with you tomorrow.